I'd like to take a moment to reflect on the purpose and function of the silver squeeze movement, and how it fits into the broader monetary landscape. While some people believe that the silver squeeze will cause a dramatic increase in the value of silver and bring about the collapse of the dollar, I believe this is a misconception. While the movement may hasten the inevitable end of the dollar system, silver becoming a form of money again is a natural outcome of this process, rather than a direct result of the silver squeeze. That being said, the silver squeeze movement is still valuable in that it raises awareness of the importance of physical silver ownership, and encourages more people to acquire silver as a means of protecting their assets. By doing so, a greater proportion of the population will have access to real monetary resources, and the distribution of gold and silver will be more equitable once the end game of the dollar system arrives. While the silver squeeze may not directly cause the collapse of the dollar, it is a positive step towards a more sustainable and equitable monetary system. Perhaps it's best not to use the word, given its negative connotations nowadays. If more people are awakened to the truth beforehand, then they will be better equipped to participate in rebuilding the division of labor when the end game arrives. Without a silver scooter or a silver squeeze, fewer individuals would be aware of the inevitability of the end game until it is too late. These individuals would likely have more wealth, while a greater number of people would have slightly less or more evenly distributed wealth. But what is more advantageous to restoring a functional division of labor? Is it having as many individuals as possible with real resources before the monetary system implodes? Or is it better to have a situation where real money is not concentrated among a small number of sources? The answer lies in ensuring that more individuals understand the situation, so that resources can be distributed more evenly. The objective is to gather as many stackers as possible to join us before the end game, enabling us to reconstruct a larger base for the division of labor. Our goal is to spread the silver squeeze movement this year, in 2023, to attract these groups of people who will ultimately rebuild the division of labor when the monetary system collapses. What I want to emphasize is that as the spot price of silver rises, the holdings in SLV also tend to increase, which has been the trend throughout its existence. In 2020, right after the world changed, there was a rise in the total amount of metal in the trust. This refers to the amount of silver in the actual ETF. As the price of silver went up, the holdings in the metal also increased. However, ever since the silver squeeze, the holdings in SLV have been on a downward trend. There was a slight increase in early 2022 when the silver price went up, but since then, the holdings have continued to decline. Zooming in on the most recent period since the silver bottom in mid-October of 2022, we see that the silver and SLV prices have gone up, but the SLV holdings have continued to decrease. This is the first time in a sustained period of months that silver has trended higher while SLV has liquidated shares and baskets and reduced its silver holdings. This suggests that control is shifting from the paper markets to the physical markets. This trend is also evident in the junk silver premiums chart, where we can see that the premiums peaked in November at around 48%, but have since fallen to 28%. This is a 20 percentage point decline in premiums from the peak. Although the spot price is rising and physical coins are assumed to remain at the same price, the premiums are falling, but not as quickly as the spot price is rising. From the point when physical premiums were about 48, the spot price has risen by 27%, while the fall in premium is about 20 percentage points. This indicates that demand is still flowing into the physical markets, despite falling premiums. If premiums had fallen at the same pace as the spot price has risen, we would have seen a steeper decline. The demand for physical silver may still be rising even if premiums fall less quickly than the spot price rises, indicating a relative decline in demand. It's crucial to focus on the chart of gold, which reveals that open interest has been decreasing since the peak of the March 7th nickel squeeze. As the spot price decreases, we anticipate open interest to follow suit, but this is not the case currently. Despite the spot price rising, open interest has continued to decline, a trend that has persisted for the past 4 months, making it the longest in recent times. When examining the long-term view of the gold open interest chart, we observed that during the final bull leg moves such as those in August 2020 and March 2022, which nearly reached 2,100, open interest also followed a similar downward trend. It appears that in both instances, there was a significant increase in open interest, indicating that paper traders were controlling the price during the final bull move up in a bull cycle. This surge in open interest suggested that there was a frenzy occurring, and a potential sell-off could follow. However, currently, we are not seeing a sell-off in gold, and it continues to move up strongly, which indicates there may be room left for this bull move to run. Regarding the long-term silver chart, there are two important points to note. Firstly, it is essential to remind ourselves that the end game monetarily in the silver market may resemble what occurred in 1980. As seen in the chart, open interest was rapidly falling during the final parabolic top that began in 1979. Back in the mid-1970s, there was a year-long short squeeze that led to a peak of around 450,000 open contracts in silver positions. However, currently, we haven't reached that level yet, indicating that we are not in the endgame stages. Presently, the silver price is on the rise, while the open interest is generally trending down. In 2019, the open interest was at 250,000 contracts, and it has been falling since then, while the price has been trending higher. Therefore, despite the increasing silver price, interest in silver futures is declining. This is where we stand in 2023. There is still a lot of room for growth in the current bull run that started in September. I predict that it's going to be a good year for silver, but a bad year for the purchasing power of the dollar, regardless of where the dollar index goes.